Good evening, everyone. This is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis since 2003. Anyway, getting right to it. As you know, I did a detailed market analysis newsletter on Sunday, September 12th. And so once again, I'm going to record tonight's newsletter. So let's go ahead and get into that. By the way, I'm not going to record every newsletter, just doing some of these on YouTube just to get into the rhythm. And anyway, let's get started here. So again, this is the newsletter for Monday, September 13th, 2021. This is my back-end recording. You can see how it works. My audio cells here. Let's go ahead and move that out of the way. And let's get started with the newsletter. You can see at the top, the table of contents divided into 5 major sections. The same general theme as I always keep. We look at the general market, look at the major indexes, then we look at a few indicators, bonds, major sectors, US dollar, commodities, precious metals, GDX. And we are looking at a few individual precious metal stocks tonight, since that group had a decent day. Potential high or low in some of those areas. Trade ideas, I'm going to be going over recently triggered names, some of the ones I mentioned on the weekend triggered. And I did add a few new long setups. One area that's particularly attractive right now is the energy area. Okay. Also a few precious metal stocks, which I'll go over. As far as the market, again, I didn't write too much here. Basically a volatile day as expected after last week's sell-off, especially the sell-off on Friday. In fact, the market indexes made new lows today, midday. So last Friday, the SPY system took a first entry long, and that trade I sent out right after the close, and there was some confusion. If you missed that trade, which I know quite a few of you did, you had an opportunity to take that trade today for better prices, as the S&P was negative midday for quite a while. Okay, so I don't know if any of you did that or not. One of the McClone Oscillator systems for the Dow went long on Friday. It closed out today for a winning trade. I'll discuss that. Tomorrow, all eyes on the CPI data. That's the inflation data. Remember last week, the PPI data came in hotter than expected. So the CPI data is going to be heavily scrutinized tomorrow. This is also OPEX. All right, let's go ahead and get started here. So first off, just covered some of these admin things. As I stated, and I covered on the weekend, I have 4 McClone Oscillator systems. So on the major indexes, the S&P, the Dow, the triple Qs, and IWM small caps. The Dow went long last Friday, and it closed out today, so it was a quick winning trade. Again, these are reversion to mean systems. They're not trying to catch trends, get it very oversold. Things get stretched in the short term. Call these rubber band trades, okay? Sometimes you could have 2 or 3 entries, like here's one that was a double entry back here in July. So first entry long here, closed out today. In and out, quick winning trade. Basically the McClone Oscillator closed below its lower Bollinger Band. That was the signal, and closing back inside was the signal to get back out. So one and done. Next. Image number 3 here shows you the statistics for that individual Dow Mcclone Oscillator system. So profit factor of 918. Remember, that's profit factor is computed by taking the gross profit divided by the gross loss. So 136,000 divided by 14. Another way to think about profit factor is, profit factor of 9 here means historically for every dollar it lost, it made about $9. So obviously that's a pretty damn good profit factor. 110 total trades. History on this one system goes back to 2005. I don't have any data before that. Okay. My S&P one, I have data going back to the 1980s. So 110 trades, 73.6% winning trades. Next. So image number 4 here. It's kind of a big image here. In fact, it kind of goes off my screen. So these are the SPY reversion to mean systems. Go ahead and put that here. So on Friday, the trend pullback system took a first entry long. Okay. Again, if you missed that trade on Friday, I have 2 versions of this system. I have the original and the aggressive exit version, which we're going to be using on this trade. So if you missed that Friday trade, which I completely understand, there was some confusion about it as I was having some technical issues and it was sent out late in the day. You did have a chance to buy it today for better prices. You could see the little candle here. It went below Friday's lows for quite a while, a good hour. So you had an opportunity to take that trade if you follow the systems and you mentioned you missed it on, Friday. Now, if the market does come down again and make another low, the system could perhaps have a second entry. That's the way it works. So that does it for that. Let's move on. Image number 5 here. This shows you the trades for the system. I have the trades here going back to June of last year, simply because this is an image and anything bigger, it's too large. Again, I have data before that. So you can see the open trade here, 9:10, that's from Friday. For the ETF, the SPY, and for the call option, I picked the November 19th. I like to go 2 months out. So there you go. Next, let's go ahead and move to back to the general market. So here's the index sector table, what transpired today. So you can see the NASDAQ still closed slightly down while the Dow led. Remember that Dow Mcclone Oscillator went long. The Dow was also the most oversold. It sold off the most last week. So larger bounce today there. Again, the indexes came off their lows. The S&P was down midday. Okay, so it managed to eke up about 0.25% gain. For the major market sectors here, there's 21 of them. More sectors closed up than down. As you can see, energy stood out quite a bit. Oil services up 5%, XLE up 2.8%. Little weakness in some of the biotechs, drugs, utilities, but not much. Small losses here. And going down, U.S. dollar flat today. Bitcoin down, Ethereum down. So these, as you know, the cryptocurrencies sold off last week, and little bit of sell-off today. Nothing like last week. As far as commodities here, once again, we see strength in crude oil and natural gas. Look at natural gas here. 5.9%. Remember, last week, these are the two strong commodities while the ags were down, when they were down again today, except for sugar. But continue to see nice gains here in the energy. Uranium also had another great day, which is not on this list. As you know, uranium, I've discussed it being in a secular bull market. Precious metals, they reversed a trend. They were down last week on Friday. Little up today, silver flat. The stocks, though, were up nicely. So, again, one day doesn't set a trend. Some of these stocks have potential higher lows in place that enable you to have a tight stop. So keep an eye on that. As far as bonds, both high yield corporate and TLT was up today. TLT is likely to move tomorrow based off that CPI data. Now, if you want a positive for the market, guys, the fact that high yield corporate is holding up is a positive for the market. Next. Item number 7 shows the economic news calendar for this week. Again, tomorrow, all eyes on the CPI inflation data. Remember, the previous week, the PPI data came out, and it was hotter than expected. So if this is hotter than expected, might could spook the markets, perhaps. All right, let's go ahead and move on to the index charts. So first chart below here, chart number 8 is the Dow. So you have this long trend line here going back to January of this year, kind of a coil look. We broke that early last week. Little bounce back today, but obviously no changes here. Still downtrending. Your resistance now is this broken downtrend line and 50-day moving average. So if the Dow rallies up higher here, guys, this is an area to watch for a potential fail, this trend line and 50-day moving average. Okay, we just simply got oversold here in the short term. So one possibility for the market is the Dow to rally up here, retest this, and then sell off. There's really not a lot of support in this range. If the market wanted to have a deeper correction for seasonality, which is, this time of year into about, early October, this is your big support range in the Dow down here. Next. Chart number 9, here's the daily S&P again, I've been talking about this, all year long. We've had these shallow corrections, and each correction has, basically tested the 50-day moving averages. There's the 50 SMA here and 50 EMA in red. Undercut it a little bit and then reverse. And the last 4 corrections have coincided with options expiration, and then you get the rally after options expiration, OPEX, as we like to call it. And, by the way, options expiration is this week. So lo and behold, we've getting this sell-off into options expiration, just like these last 4 times. Is the cycle going to repeat again, where we test the 50-day and then go and make a new high like we did these times, or is it going to break? I have my doubts we'll see a 7th time, but we will see. So this is the chart to monitor. Next. Chart number 10, here's the zoomed out daily view. I discussed this on the weekend, this really long wedge pattern. We haven't broken that wedge yet, okay? And the on a good clean break, you'd like to see it break the 50-day moving average. The wedge could measure all the way down to this area, taking the height of the wedge. So for now, again, it hasn't broken, just something to monitor. We'll keep an eye on it. Next. Moving to the intraday charts. So chart number 11, here's a 60-minute chart. The horizontal lines here represent the area where, the area where the NYSE tick indicator spikes above 1,000 and then 1,500 for the thicker lines. I find that it tends to be important psychological support and resistance for the market, so I mark it via these horizontal lines. The signal is actually generated in my TradeStation, but I put it on the 60-minute chart so you can see where these are. So again, we stalled at these resistance last week. In fact, today we had a new one generated here at 1492. See this little spike here? That's exactly where we stalled this morning. Okay, hit that, and then we sold down. We made a new low today, and then actually, let's see. Yeah, that's where we stalled this morning. So you can see here we tested this tick pivot. There's also this open gap. We almost filled that gap. I've been talking about this gap being a magnet, right? So then we bounced. You can see though below here, the next, you got kind of an air pocket to the next major support at this 44.15. You have 3 of these tick pivots all lined up together. Next. Chart number 12, here's another 60-minute chart. These horizontal lines represent your traditional support resistance, basically matching past major high and lows, as you can see. So again, you can see we got into that gap today. Those gaps you'll find on the S&P cash are magnets, okay? And lo and behold, we bounced. And we went right back to this line here, which was a previous support, now possible resistance. We'll see if we can get more of a bounce tomorrow, though. So, again, my thought is that S&P will probably form a lower high sometime on this bounce, that this correction's not overly done, but, who knows with this Fed-driven QE market, right? Next. Chart number 13, here's the 15-minute view. Kind of focuses on this open gap. We didn't quite fill it. We almost did, though, right? Finally, chart number 14, the 5-minute view shows you today's action. Again, we started up on a positive note today. And like I said, if you missed the SPY trade on Friday, which was at the close here, you had an opportunity to buy it here or in the afternoon for much better prices. So if you follow the systems and you were annoyed that you missed it on Friday, you could have bought it today, guys. All right. Next, let's move to the KISS charts. So the KISS charts, if you happen to be new to Breakpoint trades, they're this proprietary trending-like systems that we have here. Kind of gives you these kind of trailing stops. So no new DVT here on the S&P, still pretty wide there at 43.68. The ATR indicator here, that's an important support. You can see we're coming near it. This is the weekly ATR, by the way. Here's one thing I talked about on the weekend, this moving average ribbon. So looks like I meant to update this. This says 4. This is actually 5. So I talked about the BPTMA over the moving average ribbon. The BPTMA is a custom moving average we have. and it turns color by slope. Okay, so it's really cool whenever you put it on the ribbons. You can see whenever it pinches into the ribbons, these are buy opportunities, right? The last all year long, you can see it's been turning red for 4 bars and then reversing up. Well, today it's red for a 5th day. So definitely something different, you know, a little different from these past trends. Possibly saying that, you know, we could be having a deeper pullback than we have in here. Next. Chart number 16, here's the 2-day kiss. Still wide DVT there, 43.48. Again, gives you a little more room on the 2-day. Each candlestick represents 2 days. So trying to filter out a little bit more noise over the daily. Next. Chart number 17, here's the cycle time frame. So we have 4 time frames. We have the daily up here. We talked about the amateur buying last week, or the previous week. Tends to correspond there before a pullback. And you can see how well that worked. You had it here, and you had the Mark 9, and boom, nice pullback. Here's the ATR support. You can see your amateur buying here, here, and all led to pullbacks. So pretty useful indicator. By the way, we will be leasing these indicators out, guys, so you'll be able to use them on your side on TradeStation. Here's the half day, 195 minute. So we had a little DeMark 9 there, got oversold today. 60 stochastic, got into that 50% area talked about. Lower time frames, 2 hour. You can see 60 stochastic firmly below 50%. We get to get oversold here, 9 DeMark, and a 13 DeMark on the 60 minute. So got oversold, bouncing, not surprised. The ATR on these time frames is now resistance, as you can see. Next. Chart number 18, moving on to the triple Qs. Again, triple Qs. Let's see. I think this chart updated. I'm going to pause this video a second, guys. It did update, I'm sorry. Remember the triple Qs, the NASDAQ area was the one area that was down today still, while all the other indexes were up. Anyway, you can see here, slight down day today. We basically bounced right off this 20-day moving average, okay? But below that, though, 370 is your major support and 50-day moving average, as I discussed on the weekend. Next. Chart number 19, here's the 60-minute chart. We talked about this umbrella top last week, which played out on Friday. Again, trying to bounce here a little bit. This isn't a big support area, though. If you look here, really nothing here. So even though this is bouncing, if we get a little follow through, this area here, I could extend this trend line out of the umbrella pattern. This is resistance. So if this gets up into here and starts curling, this would be a low risk short. All right. Otherwise, these are your bigger support areas down here, like 370. Next. Taking a look at the KISS charts, here's the daily KISS, similar to the S&P. ATR, monitor that. DVT, no changes. You can see the BPTMA pinching in the ribbons. I don't have the 2-day chart here, so let's move on. Here's the cycles. Again, cycles, we had a DeMark on the daily, pulling back. ATR, monitoring that. We got oversold on these smaller time frames down here. ATR is now your resistance. You can see how the BPTMA has flipped to a bearish configuration on the smaller time frames. Next. Chart number 22, IWM small caps. They came well off their lows today. Look at this. IWM went well below the 20-day moving average and popped right back. Got a long-legged black candle doji here. Moving average ribbon is pinching here. If this can form a higher low and rally, well, you know, could the market recover? We'll see. Next. Chart number 23, here's the weekly. As you know, it's been in this range for a good 6 months. Let's see, 2, 3, 4, 5, 6, 7.5 months. So there you go on the indexes, guys. We'll see what happens tomorrow. Futures are up slightly tonight. So let's go and look at a couple indicators. Chart number 24, here's the VIX. So the VIX was up today when the market was down, but closed down. You can see, I talked about this on the weekend. I said the VIX wouldn't easily be able to get above this upper Bollinger Bands because of the slope. And then you can see that's what happened today. It was trying to get up here, closed back in the middle here. So still something to monitor. Again, a really good buy signal for the market would perhaps be if the VIX could rally and close outside the Bollinger Bands and then close back inside. Just like all these times, these were good buying opportunities. You close outside the bands, you close back inside the bands. That's what these arrows represent, and you can see how well these have worked. Next, chapter 25, here's the VVIX. So early last week, this gave us a warning on the market. I think it was Tuesday, this went above 110. That always gives us a good early warning that the market may sell off, and that's what happened. Still firmly above there. But for me, the trigger, the VVIX is first useful when it goes from below 110 to above 110. Up here, it doesn't really mean anything to me. It's when it first crosses. That's why I have these highlighted, when it crosses. Next, chapter 26, here's the Dow Mcclone Oscillator. Again, I talked about the statistics on this system. It had closed below its lower Bollinger Bands on Friday. That was a trigger. Closed back inside today. Again, you could see some of the past signals. You could see on the signal on the Dow. Again, sometimes on deep corrections, you need 2 or 3 days. I've seen 4 days before. Like here's one. I know this was at least 3 days. But, you know, sometimes you only get 1 day. And then you get a quick trade. Again, think of this as a reversion to mean. And it worked. Next. Chapter 27. Again, I'm not going to go through all these comparison charts. You know, these were building like the small cap or the large cap advanced decline line versus the small cap advanced decline. You had this negative breadth here developing. This was making lower highs. This was making higher highs. Next, moving to bonds, chapter 28, TLT 20-year bonds. So still in this coil up today. Again, this is likely to move on the CPI data tomorrow. Moving average ribbon is pinched. MACD's recycled near zero. It really is set up to rally if it wants to. Okay. Now, if this goes up, that means long-term rates go down, right? Bonds move opposite of interest rates. So we'll see. Next. Chapter 29, J&K, high-yield corporate bonds. Still holding the 9 EMA. This is holding up very well. The market tends to follow this, so if you want a bullish view on the market, the fact that this is holding up is a positive. All right. There's a lot of other negatives, but this is holding up, and this tends to represent liquidity. So keep an eye on this, guys. Next. Moving to market sectors, chapter 30, here's the communications sector. Always got to keep an eye on this. That contains a lot of those FANG-type stocks. Trying to bounce a little off the 20-day moving average here. Next. Chapter 31, transports is following up on this. I had that coil break last week. Trying to find a little support at the 200-day moving average. Should it lose this, that's your next support here. Broken trend line of the coil is now resistance. Next. Chapter 32, financials. Little bounce today. Next. Chapter 33, biotech. Pulled back, found support right at the 20-day here. Remember, I talked about this on the weekend. This is your support area. This is your major resistance area and 200-day moving average. This was a nice low-risk long in this double bottom back here. I want to see if it forms a higher low here. See your moving average ribbon. It flipped to a bullish configuration here, is in pinching. So this is where you look for a potential higher low to form. Next. Chapter 34, IYR real estate. I highlighted this a couple weeks ago as a long about this trend line. It broke through it, gave a nice, great trade. It's come all the way back to retest the broken trend line, extended trend line. Whenever you break a trend line, extend it out, guys. Many times you'll find support at it. So far, it has. Volume patterns were good here. Next. Chapter 35, XLE Energy. This sector looks interesting to me. Nice volume. MACD kiss that had a stochastic oversold. So that's a low risk long when you see that. That was showing up on Friday. You have a nice clean trend line here. The energy looks interesting to me, guys, if you're looking for a sector to go long. Next. Chapter 36, oil services. Sort of has an inverse head and shoulder look, doesn't it? I mean, we'll see if it can bust up through here. If you want to keep it easy, Instead, I could throw a bunch of individual energy names here. You could just look at the ETFs. Next. Chapter 37, here's ERX. It's the double long, I think, and this is a 60-minute chart. So again, if you want to keep it easy, you could just buy one of the ETFs. And this is why I like to look at a 60-minute time frame, guys. So if you look at the daily, you might be looking over this high, but if you look at a 60-minute, you could see a potential entry here with a stop here, right? Volume patterns look decent. Next. Here's an individual name, Pump. It's an oil services sector. Again, it sort of has this inverse head and shoulder pattern look. Volume's decent. You had this MACD kiss, oversold stochastic. But, you could play this or you could just play the indexes, ETFs, I mean. Next. Some of the majors, what do they look at? Here's ExxonMobil. Tried to break out of this coil. Did not get the 50-day here to monitor. And finally, Chapter 40, here's Chevron. Also tried to break the trend line here, but couldn't. All right. Next. Chapter 41. This chart got out of order. This should have been up with the real estate area. You can see how it's back testing this. Previous resistance, possible support now. Just like the IYR ETF is. All right, let's move on to commodities. Chapter 42, crude oil. I've been showing this parallel channel. You can see we're breaking it now today a little bit, and the 50-day moving average. Energy area looks good. Next. Chapter 43, natural gas, just continues to be on fire. Remember on the weekend, if you listen to my newsletter, I said it was overbought, but I said on a 60-minute time frame, I saw no MACD divergence, so it was healthy. And lo and behold, we saw another rally today. Not surprised. Now, I didn't look at the 60-minute chart tonight. I would do that on, say, the UNG ETF. It is quite stretched now. Hell of a rally, though, over the last month. Next. Chapter 44, copper. You can see this trend line is definitely valid. Tested it on Friday, stalled here today. This is your pattern. The bullish view is you've had a large A, B, C correction over the last 4 months. Next. Chapter 45, uranium was up yet again today. This has just been absolutely on fire. There is some RSI divergence up here, guys. Be very careful. I sold more of my position today. I don't have much left. I'm looking to buy on some decent pullback now. I bought a bunch down in here, and I added on this trend line break. It's been a great trade. Remember, guys, I've been bullish on uranium all year long. I pointed this out back in December as a new bull market, and I've been correct. So let's take a look at the larger time frames. Chart 46, URA on the weekly. I mean, look at this. 1, 2, 3, 4 weeks up in a row now. Again, this was an excellent buying opportunity. This was the largest pullback in this bull market uptrend. The bull market started here technically on this big weekly trend line break. That's when I was bullish. And I said all year long that these pullbacks were buying opportunities. They were. Yet a larger pullback here. Came back to the 50% fib. Was an excellent buying opportunity. Now, it is not an excellent buying opportunity. You need a correction again. Finally, chart 47. Here's the monthly view. And again, this really illustrates it, guys. Especially if you've read that book by Stan Weinstein, Secret to Bull and Bear Markets. You came out of this multi-year basing pattern, right? Moving average ribbon was pinched to hell and flipped to a bullish configuration. You can see on here on this monthly time frame, notice this pullback just looked like a pullback in the uptrend, didn't it? Didn't look like anything. That's why you got to look at your larger time frames. Next. Chart 48, Bitcoin. So down again today, but a little off the lows. Let's see if it can form some support in here or not. You can see it's had MACD divergence at the recent highs. Next. Chart 49, Ethereum. You can see it tagged its 50-day moving average today, bounced off that. Next. Chart 50, one of the individual stocks I mentioned that's had the best relative strength is this HUT. And you can see, still holding up very well. Tested its 9 EMA today. Volume patterns are good. Now the moving average ribbon has got super stretched up here. I'd rather see a longer consolidation, quite honestly. Next, chart 51, US dollar. Moving average ribbon's pinching here. It was flat today, no changes. Next, chart 52, gold. Still trying to hold this trend line here. Sloppy action of late. This is your big support it bounced off of, which was established back here in a double bottom. So like a triple bottom. This is your main resistance, and we'll see. Keep an eye on the stocks, on the ratio. You want to see the stocks lead, GDX GLD. It was up today. One day does not equate a trend. Next, chart 53. Here's the weekly. This is probably a cleaner way to view it. This is your main downtrend resistance line. That's your main support. Moving average ribbon pinched. Next, chart 54. Silver. Again, had that rally up to the 50-day moving average, stalled out. You know, that's its main resistance. Off the lows today. Next. Chart 55, GDX up today. Again, I drew a downtrend line here to monitor. Again, we'll see if it can establish a higher low here or not. Keep an eye on the ratio here. You want to see the stocks outperform. Now let's take a look at some individual names that interest me. First off, chart number 56, GSS, gold stock. Beautiful coil. We like these coils. So this is one to watch. I am long a little bit of this one. Next, chart 57, FSM. It's a silver stock. Got a higher low here. If you're long, put a stop right here. Okay. Got sort of an inverse head and shoulder look to it. Next, chart 58, DRD. Another one to monitor. A little downtrend line here. I like the FSM one a better though above. Next. Chart 59, EXK, silver stock. You can see you got a potential higher low here. If you're long this, stop right here. Okay. Next. Chart 60, IAG. This one interests me. You got really a double divergence here. You had a positive divergence here, and you have another divergence right here. Got a volume reversal. It's had a heck of a correction. If you look at the ratio, looks interesting. So this one interests me. I own a little bit of this one. Next, chart 61, KL. I also own this one. This one, very strong relative strength. You can see it busted out of the coil back here. Had a flag here, busted up. And look at this outperformance. Look at the ratio. It's been trending up for a month, while the other ones just are up for a day. Next, chart 62, MAG. Here's another one. Could it be an inverse head and shoulder pattern? We'll see. Next. Chart 63, MUX. Yet another one. So there you go, guys. All right, let's move on to the trade ideas. So chart 64, Apple, or Crapple, as I like to call it. You can see I extended this trend line, which for now it's trying to bounce off. There is an Apple event tomorrow with the iPhone 13 and Apple Watch 7, stuff like that. Maybe we bounce from a lower high. Next, chart 65, GSKY, long idea that broke out last week. We like these coils. This was your trigger right here. Put a stop right here. Look at this move. Very strong relative strength. Take some damn profits now, guys. Next. Chart 66, CNK. This is a long idea of mine back in mid-August. Off this divergent low. Low risk. You had a second, basically a double divergence here. See on the RSI. Divergence 1, divergence 2. 3 pattern push. Anyway, you broke out of here. Great trade. It was flagging. Busting this out again. If you want a measured move, here's your measured move. Up into this range. 21. But obviously you have your 200-day moving average here. If you're long, put a stop right here at this higher low. Next. Chart 67, CTAS, long idea from a couple weeks ago. I talked about this in the weekend. If you stayed in, your swing stop would be here. It's had a nice move. I'd move that swing stop up, though, at this point. No reason to, have it go all the way back down here. But it's had a nice trade from this resistance. Next. Chart 68, ASML, what can I say? Just continues up, just continues to drift higher. This was your original trigger back here. Stop at this point right here, higher low. Next. Chart 69, DCT was a nice basing pattern. Down today. Now, if you didn't stop out at the 9 EMA, still looks okay. I'd put a stop probably at today's lows at this point. Next. Jabber 70 TXN, I mentioned this on the weekend, holding up very well. Big, large coil pattern. You can see it was up today. So if the market does hold up, you know, this one has nice relative strength. Next. Jabber 71, Home Depot. This is one that is in a coil. We talked about going long back here in the middle of the coil. This resistance trend line. Hasn't confidently broken out of this yet. Looks okay. Next. Jabber 72, Fold. So this is one I've been following for quite a while. I like these long basing patterns, right? These Weinstein type basing patterns. I talked about this one way back here, being low risk at support. So I've been riding this thing for a couple months now. I said, now watch for this broken resistance here to act as support. And so far it is. Moving average ribbon's also pinching. Next. Jabber 73, McDonald's. Triggered last week. So far not moving much, but holding up fairly well. Still looks okay. Next. Jabber 74, CDK. One long idea from last week triggered. Just kind of drifting up. I wouldn't give this one too much room at this point. Next. Jabber 75, AMC, Reddit type stocks. Been on the watch list. Again, these are volatile, guys. Be aware of that. It is profitable if you took it in here, obviously. Next. Jabber 76, EMR, following up on the shorts. Short idea from last week. Really played out. More than exceeded symmetry, as you can see. Take some profits. It's been a great trade from this wedge. As I stated, guys, wedge patterns always have MACD divergence. Next. Jabber 77, Blink. Here's one from the weekend. It did give a short trigger today. It is off the lows, though. Remember, the market was quite oversold coming into today. It was down. S&P was down 5 days in a row. So that was the risk with some of these shorts. All right. Next. Jabber 78, Cron. Kind of mentioned it on the weekend. It is breaking a support here, but, you know, what worries me about this could be a double bottom, too. All right. Notice your MACD is pinching, so be careful of these. Next. Jabber 79, CLH, short idea from last week, still weak here. Next. Jabber 80, Costco. I mentioned this is a short idea on the weekend, lower risk. I said, you know, it's up here versus a short that's way down at the lows. You have MACD divergence, so you can put a stop right here. It is triggering today. Now, you want to see it break its 20-day moving average. And remember, this is still uptrending, so, you know, it's not just going to sell off easily. We had it as a long idea way back here originally in this coil. Hell of a move from there, wasn't it? Next. Jabber 81, Beam. Trade idea from the weekend. Triggered is a nice short through this trend line today. Notice there is a little support here at the 50-day, though. Next. Jabber 82, Snap. Been a coiled pattern. Been on the watch list for a while. Triggered today. Nice quick short. Next. Jabber 83, Shopify. It's been on the list as a coil. Now this one went down below the trigger today and reversed. All right. Market's oversold, so that can happen. Decide where you want your stop to be. I wouldn't have a stop up here at this point. It's too wide. Maybe up in here. Next. Jabber, moving on to ideas that have yet to trigger. So Jabber 84, He's. I showed this as a coil pattern on the weekend, and it's still coiled. And remember, guys, the longs I showed above are valid in the precious metal area and the energy area. Okay. Next. Jabber 85, SGMS, coiled pattern, looking more like a long at this point. Next. Jabber 86, OSTK, could be a short if it loses this area. Could also be a long with a tight stop right here. Next. Jabber 87, Tilray. Next. Jabber 88, 4, could be a short if it loses this area. Again, it is quite oversold here. I'd honestly rather see it bounce than short it on a bounce. Next. Jabber 89, NCMI. Here's a new one. Lower risk one. Got some nice volume here. Trend line trigger right in here. Next. Jabber 90, Apps. Bullish volume here. Resistance here. We could have a target up to here. Next. Jarbor 91 key. Nice volume today. MACD trying to curl up. You got a spike here. I wouldn't wait for that. I'd look maybe right in here. Next. Jarbor 92 ONEM. Nice volume today. You got a resistance right here. Monitor the 50-day here. That could be your first target. Next. Jarbor 93 KPLT flagging setup. One to monitor for a long. So there you go, guys. And remember, I have some longs in the energy area and the precious metals. So there you go. Let's see what happens tomorrow. Have a wonderful evening, and we'll see what happens tomorrow. Take care.